Hey everybody, welcome back to another episode of Ryan Makes Sense. Today we're going to be looking at stocks from Brazil. I don't know if you guys have noticed, but the sentiment around Brazilian stocks across Twitter is that they have been down and they are ready to break out. I'm not sure if that is true. We're going to take a look deeper and see what we can find out. Let's go ahead and jump on in. All right, we are on the world's greatest website, finviz.com. I'm going to shrink my head and we're going to look for stocks in Brazil. So in the country where my head is in the way, Brazil is actually right here. There are 44 stocks in the country of Brazil, that are originated from Brazil. We want a quick ratio of 1. That means that if they were to close doors tomorrow, they have sufficient funds to pay any debts or loans, etc. So now we are down to 19. We want to look at gross margins over 20%. Let's do over 20%. We're now at 16. Let's look at stocks that, we only have 16 here. Let's do one more. Profit margin, where's profit? But I also don't want to omit any that are almost profitable. So I think this is fine. And we'll just go from there. Okay. So let's just look at the first 5. We'll look at 5 at a time. And it looks like the last 2 are the same company. So we'll just keep that in mind. Okay, this is ticker symbol AFYA. It is at $20.45. It actually looks like it did have a big breakout. Okay, wow, look at this. Beautiful, beautiful. Wow, okay. I do want to just, it's a education and training services. For what kind of education? Medical education group engages in the provision of end-to-end physician-centric ecosystem that serves and empowers students to be lifelong medical learners through their medical residency, preparation, post-grad programs, and continuing medical education activities. Okay, so that's awesome. Let's just run the numbers on this, and it was in USD. So they have $1,840,000,000 in market cap. They are profitable with 539 million. That's huge. Wait, no, I'm sorry, 70 million plus 70,130,000 plus they make 539,970,000. Okay, let's add the cash and remove the debt. Total cash is 207 million and 03. Total debt is 468 million. 468,730,000. And take this and divide it by the 19,750,000. $110 stock price. Jeez. That's the high end. Let's take the let's take this and divide it by the 47,920,000. Does not want to work with me. Let's grab this. Okay, divided by 47,920,000. Okay, so $45 to around $110. That's crazy. The stock price has been $34.71 before. So that looks good. I just can't get over this right here. That's amazing, and this is amazing. Yeah, this one looks great. I like this one a lot. I'm just going to add some notes to this one. So Brazil stocks. AFYA. Fair value 40 to 100. Awesome. All right. That one looked good. Let's look at ARCE. Looks like they actually just got bought out. Yeah, they got sold to Dragoneer Investment. Let's just look at their monthly chart. They kind of had a little breakout before they got bought. So it went from $7 to $14. So good for them. Moving on to CIG, SIG. This one's actually going the opposite way of a breakout. This one's going down. Oh, here we go. Okay. Solid. I mean, everything looks solid here. It's 8% dividend, $7 billion in sales, $1 billion in income, $3 billion market cap. They have good cash. They're lowering their debt. I don't know what I'm missing here, but this company does not look bad at all. Yeah, it does not look that bad in my opinion. It's a $2 stock though, which is kind of crazy. Only 2 million in volume, 2.6 million in volume. Crazy. Institutions own around 12%. I mean, this one doesn't look bad at all. This one's also USD. I mean, this one looks great. 7 billion in revenue. They're profitable. 8.5% dividend. But I'm just worried about how low the stock price is. $2? That's kind of crazy. And it's never gone above $6. That's interesting to me. Very interesting. Shares outstanding continue to be the same over here. So, I mean, just the low volume. Let's see if institutions are loading up or something. Like something has to happen here. Kinda. You can see right here. That's good. So, not bad. What do they do? CIG, electricity, gas distribution, telecom, provision of energy solutions. Okay. Okay, so that's interesting. I kind of want to look at the yearly momentum on this one. Let's see. Ooh, look at this. You guys can't see it, but let me look at this MACD turning upwards. That's beautiful. And then long-term support right here. It's hanging on. You can see this was the apex. It tried to break out right here. Actually tried to break out here, and it tried to break out here. This is going to be one to watch. The end of 2023. I think if it can maintain this price of around $2.20 into the end of the year, could be solid. Could be solid. And then we have the full chart where this stock actually used to be $19. So looks like the cycle has started over. So we went under and then, oh, you guys can't really see. So looking over here, you could see the downtrend, uptrend, downtrend, uptrend. So that's a decent one in my opinion. Very good, very good. And it looks like they don't have a dividend. I don't see the dividend signs here. Let me check the monthly. Yeah. Oh, no. No dividend. No dividend. So I would watch this one end 2024. or I'm sorry, end of 2023. End of 2023. Okay. All right. These two CIGs are the same. Looking at CINT. Ooh, okay. This one has not rolled over yet to the upside. Profitable company. This is beautiful. Let me just fix this. There we go. This is beautiful right here. This is pretty flat. What kind of software do they do? That's my question. Just software engineering. Okay. I mean, they make good money, so that's pretty crazy. Let's look at the assets to liabilities. Total assets 573, total liabilities 319. That's good. I mean, this looks like something I would get into, but let's just check the math on it. They make 457.75 plus 32.88. We're not adding the market cap here because it's not over 1 billion. Let's add the cash, which is plus 53.42, minus the debt, which is 148.53, 395, and we're going to divide this by 18.18. So a fair share price of around $21. Not bad. Not bad at all. I like that. Looking down here, gross margin 31%. That's awesome. Institutions own 11%. Let's see if it's more. This shows 9%. Actually, it looks like it's going down. We can see it's actually going down. Why is that? I don't know. Let's go back here. Let's see. What were their earnings? Ooh, not good. They missed on earnings per share on the non-GAAP basis, and they basically hit their revenue estimate. The earnings before that, they missed on the GAAP or the EPS. They were ahead on the GAAP. They missed by 5%. So just some struggles here and there for this company. I'm not interested at the moment just because it still looks like it's going through some things. Looking here, tried to make a move up and now it's curling back down. So money flow right here looks like it's getting better. However, looking at the institutional and hedge funds, I don't see it. Relative momentum just kind of hanging down low. RSI is at 41, so that could change pretty quickly. However, given this current trend of this big U coming back down, I'm not sure. So we're going to skip CINT. And let's look at the next 5. There's another stock in here that has a double. So let's see what CSAN, this is an oil company, energy and oil refinery. Do they have a dividend? They do. They don't have the shares float down here. Interesting. Sales looks crazy. EPS right here looks crazy. No real, I mean, their revenues look amazing. They're paying 5.8 billion to make 8 billion US dollars. That's kind of crazy. Actually, this is good because if we see last year 2022, they paid 5.9 billion to make 7.6. This year they paid 5.8 to make 8 billion. So there's an efficiency of around $300 million there. They paid less and they made $300 million more. So Gross margin here is improved from last year, 26%. That's good. I mean, EPS looks great for this year. Next year, forward price earnings looks like it's cheap. Quick ratios over 1. That's healthy. Debt to equity. What's their debt? Let's see. Total debt's $9 billion. That's more than they make. So total assets 25.4 bill. Total liability 16.3 bill. Not bad, but their total debt is $9 billion, 9.7 billion, and they make $8 billion. And they're almost profitable, but not quite. And then if we draw our trend lines here. Yeah. So I'm guessing there's going to be a little bit more downside. You could probably get that 12. Gosh. I don't know why. And then down here, you can see their shares outstanding is down to 466 million right here. But it was just at 1.53 billion. So what happened to those shares? I don't know. I don't know what's going on with this one. I don't really see any clear patterns on the monthly here. Like left shoulder, head, right shoulder. Maybe. I don't know. This is kind of hard. I mean, if I see a huge spike in institutional ownership, then maybe, but yeah, it's kind of just dwindling down. So we will pass on CSAN. EBR, $8 stock. This is a renewable energy stock. Cool. Love that. Looks like it's just going through a cycle, like hump. Is it worth $8? Ooh. So we have declining EPS, and then sales look flat. However, 2023 is looking good right here, 7.1 bill. So interesting. Wow, dilution. Like, look here. Last year there was 1.39 billion shares available. Now there's 2.02. I'm sorry, 1.29. So they added 730 million shares. That's crazy. It's a little too much for me. No insider buying. I don't know about this one. This is going to be, again, it's just kind of humping, like hitting the hump down. Looking at the money flow going down. Relative momentum index is trying to find some life. This looks like it's kind of squeezing. RSI looks like it is going up. So, I mean, this could be a move, but this type of dilution right here is scary. That really affects shareholders in a negative way. Unless they did a split, which they didn't. I don't think they did. So, it's showing that it's undervalued, but let's see what institutions are doing. EBR. Oof. Institutions they sold out up here and then they're down here. So they sold out basically at the top, I'm guessing, around $10. Okay. So we're going to pass on this one. Let's just draw some lines for good measure. Okay. Yeah, that looks... Okay. So it's coming to the apex, which is right here. Are we going to see a move up or a move down? Based on institutional holdings decreasing significantly and the money flow going down right here, I'm going to say this is going to head downward. And then with the EPS likely going negative, that is scary. So we're going to pass on this one. We could probably get it at $4 in a year or two. So EBR goodbye, EBR goodbye. ELP, this sounds like oil. It is not. It is utilities. Ooh, look at this one. Talk about a breakout. Ooh, look at that. Nice. All right. Look at all this. Strength amazing. Momentum amazing. Money flow amazing. Relative momentum index amazing. Sales flat-ish over the last 5 years. Earnings per share are going down, but it looks like this is in a technical move. So with it already being at the all-time high, let's just calculate and see what the price comes out to for the stock. There was some dilution too, it looks like down here. Okay, so let's do this. 3,190,000,000. That's the market cap plus 392,250,000 in income, good for them. Plus 4,350,000,000 in sales, good for them. Plus cash, remove debt. This is USD. All right. Oops, not that. Okay, so now we're going to add 507,350,000 minus total debt of 2,090,610. Yep. Okay, and then this divided by 335,840,000. $18 stock trading at $9. That is undervalued, and right here it is undervalued. So good to know. Analysts have this stock at $12. I just did 18, and I did that based off of the shares float. Typically, like this stock for the year to date is up 37%, which is good. That's good for a utility. However, historically, they're not that exciting. I'm going to make a note of this one. ELP looks like stable utility div stock. It's basically what it is. Good place to park cash, but I mean, it's at all-time highs right now, so maybe rethink about it, but it's good to just know. This is a consumer defensive farm product. Stock has not been around. Oh, it's been around for over 10 years. Let's see what's going on. Sales, not bad. 12% dividend. That is crazy. That is nuts. That's kind of sketchy. Is that real? I don't know. Do they really do a dividend? I don't think they, let's see. What's the stock? LND. Yeah, it doesn't look like they're paying dividends. Even though it says they are. Okay, so I don't think they're paying dividends. Okay. So, I mean, a $5 stock that they make 169 million, 52 in income. Gosh. I mean, it looks stable. Let's see dividend history. Is this one on the NASDAQ? I don't know. Let's see what we got. LND. Yeah, I don't see any dividends. Versus if I type in KRT, this one just started doing dividends. Let's see if this one has dividend history here. Yep. Yep. All right. Yeah, and I don't think LND. I don't think LND had dividends, unless I'm tripping. Why is it so far? They haven't had a dividend for a couple years, it looks like. Yeah, so yeah. Bummer, but yeah, we're gonna pass on LND, but yeah, not a horrible company in my opinion. All right, let's just look at the next 6 because there are only 6 left. All right, this is a household and personal products stock. Ooh, looks like it has not broken out yet. It's trying. Actually, it is kind of trying. All right. They're not profitable, but they make $6.5 billion. Holy cow. Look at this. This is amazing. This is wishy-washy. Looks like dilution up here. Avon International. Okay, let's just read this real quick. Develops, manufactures, distributes cosmetics, fragrance, toiletries, operates through the following segments: Nature & Co., Avon International, TBS International, Aesop International, and corporate expenses. Okay, so let's crunch the numbers on this because this looks like a bottom play. And is it in USD? Yes, it is. Perfect. And what I want to know if it's in USD because if there is a conversion, I want to make it before I get too far into the weeds. And so it says it right here. Just a heads up for everybody. So, yeah, let's calculate the stock on this one. So it is over $1 billion market cap, so 474 billion. Awesome. They're not profitable. They're losing 485,220,000. But they're making 6,500,000. Good for them. Total cash minus debt. Total assets 10 bill, total liability 6 bill. That's good. That's good. Wow, back in 2015 they were almost bankrupt. Wow, they really got their stuff together. Good. Okay. Add the cash, which is 1 billion. They have 1 billion in cash. Plus 1,135,690,000. Give me a couple billion in debt, please. Yep. Minus 2,964,800,000. All right, that was good. That's realistic. Divided by 689,710,000. $12 stock price, trading at $6. I'll take it. It looks expensive in the future based off these numbers, but I would say the PE has to be somewhere around here. Analysts have this stock. They had it at 28 at one point, $10, and now $8. My calculation is $12.94. Not out of the picture. Not too crazy. So we like this one. Institutions, tell me you're loading up, baby. NTCO. Tell me you're loading up. Tell me you're loading up without telling me you're loading up. Not really. I mean, kinda. This quarter, this is the most they've had in the last 4 quarters in terms of institutional investment. So, not bad. Let's see our Vanguard or our BlackRock. Nothing. Wow. Who else owns this stock? One long, one short. Someone's got to own this. So I like this one. We're gonna take this one down. You know what would be awesome is an ETF with AFYA and NTCO in it. That would be sick. That would be sick. All right, PAGS. I do own this stock. I did buy it around 8-ish. And it is breaking out big time. But I don't think I have done an in-depth analysis like I should have. We know this looks beautiful. This is a stair step up. Sales increasing. EPS, this looks like stare down and then a reversal here. This looks amazing, in my opinion. I don't see any dilution over here. It actually looks like the shares outstanding are going down, which is great. I do want to run my calculation on this because I don't think I have before. So they have a market cap of $3,590,000,000. They are profitable, $310,700,000. Great. Plus they make $3,030,000,000. Yep. Add cash, remove debt, USD. Yep, it is USD. All right, cash they have plus $555,400,000 minus the total debt of $366,410,000. All right. And then just really quickly, total assets, 8.5 bill, total liability, 6.3 bill. Were they ever close to going under? Not really. 2017 maybe close. But dang, they just hit the ground running on 2018. Wow. Okay. 2018, where were they? Yeah. Okay. Okay. Now I take my calc here and I'm going to divide it by 203,020,000. $35 stock trading at $10. That's awesome. Awesome. But if I take that same number, let's grab this again really quick. Okay. This divided by 331,370,000. So between $22 and $35 is where this could be conservatively or aggressively. So that is amazing. It does look like a huge megaphone here. If it did end up doing that, that'd be insane. Now that I think about it, I don't know how many shares I have, but I wish I had more. That's always the case, isn't it? PAGS looks beautiful. Let's see if we can find that one in an ETF. That would be insane. If we can find an ETF with these like 3 or 4 stocks in it, wow. Wow, wow, wow. All right, SGML, Sigma Lithium. Wow, this stock freaking went from $1 to 40. This just looks way too hot for me. Ooh, yeah. They make 96 million, but they lose 77 million. Ouch. I'm gonna have to pass on that. And then look down here. Shares outstanding is going up. That's dilution. Sales, nothing. EPS going the wrong way. We're gonna have to pass on this, although it could be something in the future. The risk is just too much for me here. And they do have sales. I don't know why it's not populating. So they have their sales this year. Total assets 227 million. Liabilities 92 million. Not bad. But they do have sales 96 million. So I mean $30 for a stock that is, no, I just can't. I can't. What are institutions and hedge funds doing on this one? Probably did they, oh my God, look at this. What do they know that we don't know? That's crazy. So I'm going to pass. This one has already gone up over a 5x, 5,000x. Yeah, do with that what you will. I don't see how they get a $30 price target on this. I'm just gonna note it down. Just shot up so fast. It's like 5,000%. Huge inst buys. Because if I see that inside of the ETF, I don't think I could be upset. I would just have to make sure it's not a huge allocation. Ooh, this looks like it broke out nicely. This is SID, which is steel. Steel in Brazil. And it looks, ooh, the stock used to be 22 and now it's at 3. Oh my God, did they really pay that dividend now? No, it doesn't look like it. This looks great. This is good. No dilution. EPS kind of wish-wash. What are insiders? No insider buying. What are institutions doing with this? I mean, they make 8 billion, but they lose 169 million. Yeah, institutions, nothing crazy. I'm guessing they're not paying a dividend, but I'm just gonna make sure because I can see it on here if they are. No dividend. And it's actually breaking out. Oh wow. Okay, look at this, guys. I'm gonna remove my studies. Actually, before I remove my studies, I want to see what the yearly momentum is because I could see the yearly momentum being a bright red to light red to going like, oh my God, I just called it. Did I just call it or what? Okay. Monitor, let's move this. Look at that. Reversal, big reversal. Over the next few years, this thing's going to have to just, it's going to have to move up or down. And we got the momentum flipping this way. The momentum's coming around this way, price coming this way. Okay, I could bang with this one. I could bang. Let's chart it out, or let's check out the price of the stock. Ooh, I can just tell right now it's gonna be around a $3 or $4 stock because they make 8 billion plus the market cap. That's 12 billion divided by like 1.3. To, you know, remove some cash or remove some debt, add some cash, but they have more debt than cash. So let's just do this for entertainment. 4 bills. They're not diluting either, which is rare for these companies we've been looking at. 4.6 billion USD. They're losing 169,760,000. They make 8,800,000,000. And let's add cash, remove debt. Ooh, they have 2.5 bill cash. This is USD. Plus 2,548,888,000. Okay. Give me like 3 billion in debt. Long-term debt is 6 billion. Good. Minus 6,864,333,000. That's good. Okay. Total assets 16.1 bill, total liabilities 12 bill. Were they ever close to being in the red? Kinda. Like 2015, 2016. So yeah, I like this so far. Let's get back up here. So now 8.9 bill divided by 1 bill, 133. $6.70 stock trading at 347. Again, not bad. And also just peep this real quick. Let me move the monitor. Look right here. Shares are going down. They used to have 1.38 billion in 2018, 2019. And 2020, and then 2021, 1.34 billion, 2022, 1.33 billion. So, yeah. So, yeah. I like this one. We want to watch and see if they have this one in an ETF. Limo. Okay. Awesome. All right, 2 more stocks, and then I promise we're going to look and see if there's an ETF for all of this, because that would be insanely amazing. This is Semantics. This sounds familiar. Ooh, look at that fall. $12 down to 71 cents. They make 43 million, but they lose 30 million. Ouch. What's going on here? What's going on here? What's going on here? Let's... Shares outstanding. They diluted the boat right here. I want to see some insider buying. There's no insider buying. They make less than 10 million a quarter. You guys can see this. Okay. Total assets 92 mil. Total liabilities 37 mil. So that's about a 3-to-1 comparison. Total debt is 10 million. It's going up. Total assets is going down while the debt is going up. I don't know about this. I don't know about this one. What are institutions doing? What are institutions doing? Nothing. I can't see nothing here. Oh my god, it says institutional transactions minus 98%. Looks like they all sold out. Okay. We're gonna pass on this one. Okay, let me just type in no STIX. STIX, make sure no STIX in ETF. All right. SUZ, paper and paper products in Brazil looks decent. Great all around. Great. This looks amazing. Like, look at this. Beautiful, beautiful. We see a reversal up, and this just continues upward. No dilution. Shares are going down. I don't know what happened between 2018 and 2019. That's a little sketchy, but it's going back down. Insider buying. No insiders are buying that I can see. Revenue. They pay $5 billion to make $8 billion. Gross margins can't be that high. Gross margins 41%. That's huge. Okay, let me run my numbers on this. Everything is in billions, so it's easy. So 13.65 billion market cap plus 3.3 income. Great for them. Plus 8.59. Whoops, I just hit something. 13.65 plus 3.30 plus 8.5. Okay. And then now we're going to remove cash or add cash, which is a lot, plus 3.23 billion minus long-term debt. Good. 14.54. All right. So that gives us 14.24 divided by 1.29. So around an $11 stock. It's trading at 10.59. Not bad. And they're just chipping away. So SUZ would be fine. Okay, so now let's see if we can find some of these in an ETF. So the first one's going to be AFYA. Nothing? Did I type it in wrong? AFYA. Nothing. Okay. What about CIG? I don't want to look at any energy ones. I want to look at like Brazil ETFs for CIG because it's going to be lumped in like a 21 ETFs. Okay. Let's look at all of them. International, world, emerging markets, high dividend yields, Avantis. Nothing Brazil. Nothing Brazil. Like there's no Brazil ETF. That sucks. That sucks. That sucks. Okay, what about NTCO? Let's see, NTCO. None for NTCO. What about PEGs? Okay. NTCO? Nope, they don't have it. Okay. PAGS? They don't have PEGs either? Wow. Okay. That's a bummer. I think that was the biggest stock in What about SID? Okay, they got SID. Let's see. Steel. Yeah, no Brazil centric stock. Or I'm Brazil ETF. Let's see. All right, let's see here if I can find something Brazil, and I'm gonna need to blow this up. I'm gonna move it over so you guys can read it with me. Okay, so here's Global X Brazil. That's awesome. That's awesome. That's awesome. Ultra short Brazil. We don't want to short Brazil. Brazil ETF, First Trust Brazil. We'll look at that. Yeah. All right, we found a bunch of Brazil ETFs. Now we just have to look at the fund holdings and see if they have PEGs and SID and a couple others. And I'm just going to do this. I'm going to start opening. All right, FLBR, come on, baby. Okay, I have all of the ETFs open. Now we have to just go through the holdings. All right. Total, I just saw holdings. Number of holdings, 29 holdings. They better have. Okay, so these look like Brazil stocks that are on the secondary markets, I'm guessing. Yep. This one, I think we're going to have to pass on. I mean, yeah, none of these stocks we looked at. PBR. Here's EBR, the one we looked at. They have SUZ. We just looked at that one. Why don't they have freaking... Do they have... let's see. AFYA. They don't. Yeah, we're going to pass on this one, unfortunately. This one... Individual investor, I agree. I'm guessing this one has PEGs. Please have PAGS holdings. Here we go. Holdings. Okay, here we go. Ticker. Not what we're looking for. No. Oh, they have AFYA. This is the one that we did like. But still, like, they have so much petroleum. Like, this probably gives a nice dividend. Let's see, dividend yield. Uh, 3%, not that good. Again, not what we're looking for, unfortunately. Let's see what this one has for holdings. Where? Daily fund holdings. Okay. So they're holding a bunch of other ETFs or swaps. Okay. So not what we're looking for. I'm sure they have a nice little dividend, 3.87%. Okay, well, let's keep looking. Let's not give up. Let's look at holdings. Show more. All right, energy, financials. Not what we're looking for. Yeah, not what we're looking for. 8% dividend. That's crazy. I mean, it's been doing well, but it doesn't have what we want. This is one of the nicer dividends, honestly, for Brazil. It's in a long-term downtrend, though. Well, it's kind of been staying flat, but it doesn't have what we're looking for, so we're moving on. Okay, this is small caps in Brazil. It should have AFYA. It should have SID. It should have PAGS. Maybe PAGS? Come on, just give it to us, man. Give it to us. Holdings. Here we go. Show more. SmartFit, Petroleum, EMB. Wow, that's kind of cool. They have EMB that we looked at on here, and EMB we said, oh, we didn't note down EMB. Never mind. I know we looked at it. Where? Let's just see if it has PAG. Nope, no pegs. AFY. None of that. Jeez. Okay, well, goodbye. How's this been performing? Kind of the same. 3% dividend on small caps. First Trust Brazil. I'm guessing this is a lot of banks. I'm guessing a lot of banks are here. Holdings. Here we go. Okay, here we go. Let's type in PAG. It's here. All right, we've got PAGS here. AFY. Nope. SID. Is that it? I don't know. I really don't know. Let's see. SUZ. They got SUZ here. Let's see if they've got. I did just type in SID, couldn't find it. NTCO, CIG. They have NTCO here. CIG. They don't have CIG. Wow. They have new holdings. Stone Co. Is that Brazilian? I don't think so. Let's see what else. SGML. No. Okay. This so by far is what we're looking for so far. And it's not doing horribly. Has a 9% dividend? Seriously? Wow. Jeez. Okay. That's cool. Let's look at the next one. Let's see what we got. Let's see what we got. Here we go. A lot of, damn, so many pages. I guess I'm just gonna download. I'm just gonna go through Telefonica. That's good. SmartFit. I keep saying SmartFit. I don't think this is really what we're looking for, but honestly, it's 10% dividend and looks like it's doing well. Wow. If you're into dividends, this one looks interesting. Not what we're looking for though, so goodbye. UBR Pro Ultra Capped. All right, this is gonna be crazy. This is gonna be crazy. About the fund holdings. Okay, so it's another ETF with another ETF, another. So what's this? What's the dividends on this one? No dividend, but it's high growth. Or no, it's not high growth. It's 2x. Yeah, so this is not. It went from 400 down to 31, so we're not doing that. So the First Trust Brazil one looks to be the closest like ETF that has at least a couple in there. I don't know about a few of these, like UGPA. Is that a stock here? Let's see. No. What about NU? New holdings. Is this even a Brazilian stock? It's Cayman Islands. So again, this ETF I don't think has the business, but I know this stock is doing very well this year. Let's just look at it since we're here. Yeah. So it went from 3 to 8. So yeah. All right, so that was all the Brazilian stocks that we looked at. If you guys made it this far, consider hitting the like, hit the subscribe, comment, or don't comment. Have a great day.